All righty. So yeah, we'll see. For those of you, welcome back. I'm not good at this recording stuff, knowing that it's going to be sent out to folks who aren't on live because we've got both the live attendees and those that'll be watching here later on. And so welcome back. Happy Thursday morning again. Feels like it was just Thursday, like a handful of days ago, honestly. So that's I was like, Carl's like, you ready for the call this morning? I'm like, it's Thursday? How did that happen again? So, but I figure there's a good amount to talk about. We're getting into the world or the northern hemisphere growing season. We're getting into where we're dealing with weather across a lot of different places. We obviously have some trade flow conversations that we'll want to have today as well. Just kind of talk about what is going on. In world cash markets, what we're paying attention to, what is reality, what is kind of hypothesis or maybe some drama just to generate some clicks or I don't know. I don't want to speak poorly about it, but still some of it feels a little inflated. So this week, I think let's start with weather, Nick.
Sure.
Just kind of, I think that's a great place to start. We can go around the world and then land back here on the US and we can kind of talk about what is happening. We've got the haves and the have-nots to a certain extent, or we've got some pockets of worry that may be popping up, though not very blatant out there. But, what are you seeing that you think we should be paying attention to, around the world?
Yeah. So one of the things like we try to do is really think about weather in the context of what the risks are really gonna be, because ultimately in agriculture, the major event risk we're trying to, plan around other than today's policy uncertainty is this kind of big potential for volatility uncertainty, which is driven by weather. So like, you know, I just traveled across Argentina this week. Most people are still kind of talking about the floods, Zarate, all that's done. I don't see the losses being very big. We've been saying that most of the rain now is moving north. If anything, we have a little bit of an interest in the north, and the reservoirs are entirely full. I was in Mendoza, south of Mendoza. They've gotten snow. The mountains are getting a lot of snow. I'd even say that Argentina in general, when you see the winters start to line up quite wet, like this is actually a good thing in the bigger picture. So again, a little bit of delayed harvest, corn bounces back to it, but ultimately, the crops are out there. They're gonna be big. Argentina or Brazil, excuse me. And again, harvest in Rio Grande do Sul, Uruguay's behind. Um, northern Argentina. So everything's just a little behind, which is just going to push back sort of that weakest period for cash prices basis. Um, Brazil's in good shape. There isn't too much more to say about it. The points we were kind of making, which is probably a parallel you could draw between the US and Brazil, is that you've had a series of years here where your divergences, especially to the upside, have been minimal. Everybody kind of gets used to a little bit of disappointment, and you can still have very good weather. So we're seeing that now with Safrania. So again, I haven't talked to anybody where anything's new. I still think, 140s will probably a little too big, but in general, there's going to be some pockets in the South now you might lose a little bit, but in general, it's going to be very good.
I think,
Two,
oh, sorry to interrupt, but I did want to say your 140, the point you made about the 140 is the market does seem to be gravitating towards 140 for the total Brazilian corn crop. But it does feel lofty, I would say, at this
yeah,
point in time, or it feels like it might be difficult to see, though it fits the normal process of the market this time, which is, oh crap, that crop is big. Oh gosh, it's probably way bigger than we thought. You know what I mean? It's kind of one of those things
yeah.
where it's like you kind of get to where you're one-upping the other person. We went from 126 to 130 to 132 to 140 almost very quickly, it felt like.
And yeah, and so that, first of all, that happens quite frankly. Like we kind of expect in South America about like in for Argentina more like a 10% overshoot both ways to be fairly common. They go from 18 million wheat to overshoot by 2 million to 11 back to 13. It's just what happens. Um, The other thing is that from a standpoint of forecasting these with, anything more than your finger in the air, I have no we have no interest in what these US groups say about South America because they have a survey of 22 people. And then we don't like survey work to begin with, which you're aware. Um, if you're working with ConAb data, you just your divergences versus the USDA, which ConAb's the only one who's going to put out by state, and then you get more into like locals with like EMEA. You're just not going to have a historical data set that's going to suggest it's that big, even with good weather. So at this point, it's somebody guessing, and the commercials who are going to be the best to do it have the largest incentive to tell you it's huge. Like,
Yeah.
hey guys, it's going to be 140 and we're not going to need to buy your corn, so sell it to us cheaper.
Yeah,
Like
you
that's
better sell it today for this price
yeah.
because it's going to get a
So
lot cheaper tomorrow is kind of, and you have seen farmers selling slow, like in Brazil here, you've seen the slow down a little, which I was hoping Eduardo would jump on, but it's been interesting to see because I think that's the one thing about Brazil too, unless they absolutely need the space, which they will as harvest happens, you're going to see cheaper bushels come in. But they also are really great about, oh, this looks like it's going to get more expensive. I'm going to stop selling for a while. Is one of those
mhm.
things I think is the potential there as well, especially if they think you saw it in soybeans. As soon as we
Yeah.
said the trade war come into play, farmer selling shut off, and so I think there's a part of that where the Brazilian farmers gonna be like, wait a minute, our stuff's the cheapest in the world. Like, I should get paid more. You're too cheap. But obviously we'll see some moving around in there.
And the currency's strong. I mean, you just got to, at the end of the day, go back and remember like Eduardo's comments last week about the currency being a lot weaker towards the end of the year. Um, about a month ago when we talked, we had brought up, the idea of, this outsized risk of a Chinese devaluation. I think that's gone. The Chinese here, if there's one, item you need to watch, it's this RMB rate because ultimately so much of the structural imbalance of the US, China that's being addressed can be done via the currency. And fair value for the Chinese currency is probably 6.2, right? Or, it could be 5.8, and so as we kind of sit here around 7.2 and they start to look at strengthening it, that's going to play a major part in what makes these, Latin currencies more or less competitive. So at the moment, the currency is just a big factor.
It's always a fun addition to throw in there. Let's go to the Northern Hemisphere, just kind of focusing on
Mhm.
weather, kind of continuing there. Let's start with China, if you don't mind. Obviously, it felt
Yeah,
like I said last week in one of my morning comments, it was as soon as traders realized there was an issue, the weather forecast basically, like it feels like a tale as old as time, right? As soon as we start to talk about it, the forecast starts to improve. And that's kind of what we've seen. But, what are you seeing condition wise here as wheat harvest, is plugging along and we're working to get the corn crop planted? Any thoughts on conditions or what are you watching? Let's start with China. We move over to the Black Sea and Europe
yeah.
from there, if that works.
No, I mean, China, the temps are moderating. They've got rains in a lot of the areas in the Northeast. There's some dry pockets. We're using a base case of kind of 3 to 5%, summer acreage loss. I don't see any reason to change. Um, we've cut 7-ish million tons, probably cut, 10 or so by the time we're done. Um, your corn models, depending, could show, 10 to 15 lower to start the season. But again, that's coming off of a super lofty number. And most of, basically all the data the Chinese gives you goes up 1 to 1. So you don't, from a modeling standpoint, it's not going to be great. But the weather risk in general is just mitigated significantly. So, we need to get to June 15th,
Right.
20th and see what it
We
looks like.
we got another couple of weeks before we
Yeah.
can worry, and at this point, those couple of weeks don't look too terribly bad, you could say. What about as we work our way into Russia, and Ukraine? Russia's obviously dealt with some dryness. We had the wind that we were discussing last week. All that good stuff. Any thoughts on production there that we should be watching? And then no, like, Ukraine, they're right there. So let's just hit both at the same time, if you don't mind.
Yeah, so the areas we were more concerned about were like more the Urals, which are like Saratoga. It's a large producer. It just didn't get that hot, and it doesn't look like it's going to. And a big part of my understanding with those winds is that when it's it's that heat that sucks the moisture out as the winds hit that really causes problems. And as long as you don't get over 33, 90, 95, like it probably isn't hugely problematic. So from that standpoint, I don't see, I think Russian numbers are going to start. Listen, these guys who cut too much, you're going to start seeing them creep up. You'll see them start with like, oh, the exports will be higher, and then it'll be, well, the production, and again, guys who were at 79, 81, it made no sense.
Yeah.
It hasn't then, other than to tell a story, or, clicks.
Yeah.
Um, so no, we've been 83 to 83.5. I'd probably even start to slide more towards 84. But I don't think without the heat getting worse that even Rostov, I think the last 4 weeks got 50, 51 millimeter, 2 inches of rain. I mean, that's more than on average, more than enough.
Yeah. Yeah, and Ukraine so far looks good. No worries there
Yeah.
that we've seen. It so far so good. They said there have been some pockets of frost here or there, but just
Yeah.
as anywhere else, right? You're going to get those pictures on the internet, but it doesn't necessarily mean, we won't know until you get deeper into harvest a bit more, like that's one of those things where it's obviously not going to be a massive crop issue unless it's a very widespread issue, but you can see pockets of problems pop up here or there. Not necessarily a massive needle mover at this point, and it looks decent forecast wise as we go forward, do you think?
Yeah, no, and remember a lot of these places where you've had this expansion in recent years, even a Ukraine, but down into like Romania, Bulgaria, they're in really good shape. And, those are where you, especially on wheat,
Hmm.
wheat's different than other crops in the sense that you can very easily get proportional upside surprises to downside. When you look at like corn in the US, like a 2% upside surprise is big, but a 10% downside is not statistically,
Yeah.
abnormal. But in wheat, it can be 15% either way. So, again, the Black Sea as a whole, what they'll have available, there's probably a fair reason why Matif is so weak, from what's going to have be available here in the coming months if this continues.
Both there and in Europe, right? Right now, there really
Well,
aren't
yeah.
much in the way of massive wheat production worries. Like you would say across Europe, really, it's just France and corn. And
Mhm.
from what I've seen, I mean, like that, it doesn't
Yeah.
feel like there are, like something that you could point at and be like, oh, here's the problem. Like it,
And we
it's
haven't
okay.
even really like started worrying much about corn yet.
Yeah.
But yeah, like, but rapeseed and wheat in France is probably the only thing that, and I actually marked it recently just because Saskatchewan, and nobody's really talking about, but it's, the central there is getting both hot and dry. And you just have, if you actually look at that kind of center of France, center that, there, that's where you produce a decent amount of both, and both have large speculative short interest. So it would be kind of interesting if you did get, some marginal problems, in two of the larger states in Canada and Europe. Um, but no, in general, and one thing too, you got to remember is like in northern Germany, that's going to go to export. Central
Hmm.
Germany, southern Germany, that goes to the domestic market, and
Hmm.
margins are good. So, maybe a domestic market problem probably doesn't show up the in Matif. It's not going to drive speculators, but it's probably going to be more of a domestic cash issue because feeders can pay up, margins are good. Uh, but otherwise, France is the only place where you'd really say um, there's,
Yeah.
keep a closer eye. And even, Southeast England has been dry all spring and they've gotten a little rain, but they're definitely going to have some losses. And that's, the only thing they're sizable in production is wheat.
It'll be interesting. One of these days, we'll have to try to get Rory on for the Friars report because he continues to talk about Matif and the trouble that you have with the delivery market setup and some of these other things. And you bring that up and it just about the structure. This goes into domestic, this goes into export, this can work into delivery and into the Matif market structure. This cannot, and we have this sort of issue in the US. You could say that the delivery market is based entirely upon the river, and you have fringes on both sides that should be taken into consideration, et cetera, et cetera. But I feel like that's one of the things that's kind of bastardized the entire market structure to a certain extent, or at least has helped with the speculator short because it's pushed the end user out almost. Like it's just been a conversation that he's brought up where you have a lack of convergence, you have some real issues with the delivery setup, and so it's even more interesting when you have weather problems that could exacerbate some of that mess or lack of
And
clarity, in that regard.
Yeah, and so like, and that's way outside of like my wheelhouse. And the one thing I will know, like in probably in support of that, is that one group who I find to be very knowledgeable on the topic, I, speak with weekly, they specifically, and they're in the wheat export market and the domestic. And they had said that they really thought, end users liked the prices and,
Mhm.
it was really the offers that would have been holding it back. And so, maybe there actually is more weakness coming in the sense that as we price these larger crops. But then having said that, somebody else who I respect came out and said the exact opposite. Like, nope, like,
Yeah.
no, buyers don't like it. Like it's too, and so like I have no conviction either way.
I think that's really hard, right? I think one of the things in wheat that is hard is like you're saying, like we used to have in wheat, you had GASC tenders. You had a general idea or an understanding of what was being traded, how much was being sought after, what folks were doing. And anymore with Russia, the shifts that you've seen in Russia with Egypt changing how they buy. I feel like that's the problem. Like what you were saying here, where you're like one person says the end users like it and they just don't like the offers are out of line versus the bids, and the other is saying that the end users don't like it, yada yada yada. Like that is one of our biggest problems right now in this entire market structure is a lack of clarity and demand. And we look to cash, and cash is sending us different signals. Like spreads are doing one thing, basis might be doing another, your movement is good. But anyway, like I'm kind of off topic, but
No,
still
no.
something.
And I think the struggle is more so today, exactly because you have people who the cash supports what they're saying, the futures make sense, and a lot of these groups are far more disconnected, sort of from the futures and the cash, right? And so, everybody can cite something that, like I see both sides right now, and I have no idea which one's right, and both of them are like people who do good work you respect, so
Right?
very
That's where I'm
very
at.
wait and see.
And that's all you can do is get
Yep.
further into June, see what happens as we work our way towards the summer, or to the middle part of the summer into the end. Weather obviously will play a role, farmer attitude, currency, policy shifts, like all of these things are still very open to change.
And one thing I would say too is like I think that there's like a dichotomy between the commercial, like and when I say the commercial, I'm talking like the big global grain buyers
Hmm.
who are inherently very bearish, very
Hmm.
balance sheet driven, are waiting to fade the next weather event and are
Hmm.
trying to tell the farmers we're going to buy from you for cheap. And then that sort of analyst class that's selling something on social media today, super bullish, we just because of a lot of
Just be
things that they
patient.
probably don't
Yeah.
make, it is what it is. And the commercial just waiting to sell this rally, but you don't have very much rice price or right price risk priced,
Yeah.
excuse me. So you end up in this situation where what you really want to do is kind of look for the signals that this gets overextended one way. And even in like wheat last week, I kind of started writing about contrarian indicators, things we watch, because people that are essentially have gone the other way, and usually when they flip, it's a good indicator that it's time for
Yeah, that
for
the
wheat to
market
take a
is,
break.
yeah, yeah. No, it is something to be paying attention to or something to watch for sure and kind of pick up on as you go
I'd like
forward.
I'd like to
Yeah,
hear too from Carl on the cattle on that, because that's been like one of the most popular on everybody getting ready for like the fourth time for cattle to roll over officially.
right. They're going down eventually
Yeah.
someday. It's happening soon. It's unsustainable. I feel like I've been hearing that about cattle prices for like 2 years now. It seems, but maybe not.
Ooh, and that,
Um,
yeah.
Yeah.
Go ahead.
Talking about risk premium in the market, talking about, incentive and things like that. Let's shift over to North America.
Mhm.
And some of the conversation that we've been having, and Carl, I'm going to lean on him for the Western Corn Belt sort of assessment. And we talked about it last week during peer group, which you were on, and it's been a subject that you've brought up as well, Nick, and your AIQ, and Carl and I have talked about it in our commentary quite a bit. And that is this sort of idea or this maybe shift in sentiment or mindset away from everything's perfect, it's all ideal, we're good, you know what I mean? We may
Mhm.
see this huge increase in corn acres, we may not, and so we're trying to figure out right now, what all is happening, and we do have pockets of concern. across the Eastern Corn Belt. And it's one of those things where over the last week it's kind of come up more. Obviously, planting progress on Tuesday showed some concern in Ohio, some worries. There's 2 million acres in parts of Illinois that are unplanted as of Sunday night, 1.3 million in Indiana. Now that's estimates based on March intentions and percentage, and I am one that I have to preface, I always take crop progress with a grain of salt. I struggle with it to a certain extent too, simply because there isn't a lot of uniformity. There isn't a ton of training. It's just kind of one of those things. But having said that, I also work in the cash market in the Eastern Corn Belt. I'm also working to trade into this market. I'm trying to originate in Central Indiana. I'm working to trade the Michigan market. And we have seen basis move substantially higher, kind of being driven by these delays in planting and this uncertainty in what happens as we move forward. Last thought kind of on it, and then I'm going to open it up to the two of you to kind of give your opinion on what you're thinking. But as someone, I work with over 70 customers in North America, and most of them are centered in Indiana, Michigan, down in Ohio. I have a handful out in the Western Corn Belt as well. But the problem that we're running into currently, or some of the issue that we're hearing about in the Eastern Belt, is in a normal year, if you were delayed in planting, if you got to where it was the first week of June, and you were worried that you were going to lose yield, because the later you plant, the more risk you have that you're going to have a suboptimal yield outcome. And if you're trying to pencil out, okay, what does this look like if I have a 5 or 10% yield loss currently at today's value? And we're going to take in crop insurance and things like that. But the amount of money these guys have to put out, and the fact guys and gals have to put out, and the fact that we're looking at, basically guaranteeing a loss whether you plant soybeans or corn at these current prices, especially if you're suboptimal or sub APH from a yield standpoint. There's a lot more talk that we may see, in a normal year would be acres switch to beans, prevent plant taken, because the math makes sense if you're a grower who's 200 bushel plus, and working to guarantee yourself some revenue. So having said all of that, that is a new conversation that's kind of starting to pop up here. Do guys, gals lean over into beans? Do they continue to push corn? Jeff Middleton mentioned this morning on Twitter that he thinks in Ohio they continue to push corn in. And so, uh, Carl, or I'll start with you on, kind of what you're hearing from the Western Corn Belt side of things, and then Nick, I'll lean on you a little bit just on, where we're seeing some of the anomalies, or where maybe some of these concerns are popping up to a certain extent. And obviously, maybe we'll touch base or touch on what we think for acres. But Carl, go ahead and let's update with what you're hearing, from your contacts out west and some of the thoughts here on the Eastern Belt side of things.
Yeah, yesterday I actually talked to some of the merchandisers that I worked with out in Iowa, that north central, northwest Iowa, and up in the southern Minnesota. And basically out there, I mean, they got all their corn in. They're pretty much done planting out there. It's dry and it's been warm, but that doesn't necessarily mean a drought. That Iowa ground out there, especially you get up in, from Des Moines, Ames north, you got a lot of irrigation up in there that has went in. So I mean, the warm really don't mean too much. And actually to stress that crop a little bit this time of year and get a root system underneath it, you need an Iowa to hold them corn plants up. So not really knocking yield out there. I mean, it's a night and day difference from east of the Mississippi to west of the Mississippi this year. You're going to have two very distinct corn crops and probably soybean crops too. A few more corn acres went in Iowa this year. Pioneer out there is estimating they sold enough corn seed for 96 million acres. Now, some of those will be replanted, some won't get planted. We're hearing that some guys are swapping out corn seed for soybeans. I told Angie yesterday I can almost make the case right now. You could make a case where you could see enough corn acres shift to soybeans where we could bump soybean production and not cut corn production enough where we could be in another situation, kind of like last year, where we produced two good crops that were enough to meet. We didn't build carryout, obviously, but we met demand. And I think that's what we're starting to look a little bit more at that, combine the two and see where we're at. One thing out west is some of the buyers are starting to get a little nervous. The elevator I worked for out there, biggest one in the state, is out of corn. They have one more shuttle to load out, and they're done. They're done with corn, done with corn ownership. Right now, those and two other elevators, I would say, would be about 30 to 40% of Iowa's corn. They're all out. That corn has left. And so now you got feeders out there, you got ethanol plants that have been sitting there, punting down the road, not standing in to buy corn, and it's gone. And I think the next 3 to 4 months out there in Iowa, it's going to get pretty dicey for some guys. You're going to see corn imported into Iowa, likely from, you'll see Minnesota corn slip down. But the thing is, you're not going to see corn, where else are they going to draw it from? Because we're tight out here in the east. So there's a little bit of a little bit more urgency in some of those buyers out west, because there's a good crop coming, but that's down the road. And right now there's a little bit of panic in that Western cash market.
It'll be interesting. Then we'll lean over on to you, Nick, to talk a bit more about what you're seeing from the weather front. But as a merchandiser, or as merchandisers, because the three of us have all merchandised in our day, the market's telling you, the market told you to hold corn into June and to get it out of there by the end of July, like end of June, end of July. The inversion that's been present in this market structure has been pretty solid July forward throughout much of the year. But in an odd sort of twist, you've had a crap load or a decent amount of carry that's incentivized. You had not only had cash carry, obviously, but you had good carry in the spreads and solid basis opportunities, to basically book really decent margin as a commercial for June movement. And so that'll be the thing to me that I think is most interesting, is I think the commercials gotten so used to the other commercials, the large commercials gotten used to the small commercials having a ton of bushels. The small commercials and the large commercials have gotten used to the farmer kind of continuing to lean into this market and selling as much as they needed to. And honestly, I would argue that the bulk of the selling's taken place ahead of planting because we needed cash. And now those who are holding on to supplies from a farmer standpoint, show them the money. They're gonna Jerry Maguire their way through this thing. And they may end up disappointed in the end. Like, don't get me wrong, it's not a guarantee that all works out well for them. But it's one of those things that we'll see see as the market, moves forward, what happens, as a buyer the first part of July. Because I would say that a good amount of short-term needs are covered, and the idea is that the grain continues to flow. And so I do feel like, one of the things that Nick had said about the commercials wanting to buy it cheaper, kind of applies here. So with that, I will shut up and go ahead, Carl, and then we'll lean on what Nick has to say.
One thing that we have seen out there is, and this was kind of interesting yesterday, and this is not uncommon out west, but usually when it happens, tells you the market is getting close to a bottom. Is all of a sudden the guys calling up that are like, "Oh yeah, I forgot I had 50,000 bushels in that one bin. I need to get them sold." Oh yeah, I forgot I had 25,000 bushels over here. We're starting to see a little bit more old crop leak out into the market from guys who claimed they were out of inventory, mostly corn. So kind of could make for a little bit of an interesting June stocks report. I'm just throwing that out there. But we did see a little bit more, like I said, give up selling yesterday on the break in corn, which, you held it this long, why not puke now?
And along with that, I think this east versus west creates a lot more uncertainty, especially like if you want one strategy that makes money in agriculture every year, every time it's buy below cost of production. Like sooner or later, it's the prices are going higher. So, we're at that interesting point now where prices are low enough. But, I think to your point about uncertainty, and this is what we've been writing about, is just, this June report too, from an acreage standpoint, is going to be a lot of uncertainty because, the government is the one who will see if they're going to start reeling back the acres first, in aggregate. The other thing I think, Carl, to that point, that's very interesting is people talk a lot about like, oh, you need the world ex China. USDA has the balance sheet, but this year in particular is different. China doesn't have good margins domestically, like across industries. There's some, the hogs gotten better, blah, blah, blah. But if you look at these numbers that everybody's throwing out there about world grain ending stocks, they're not true in the rest of the world. That they are taking in massive assumptions on China. The world without China corn and wheat is up 12 to 15 million tons year on year. So this whole like tight, so I do think there's a risk that people are going to get caught long this inverse in the cash, especially so I just, and especially if you have like any early harvest coming off in the West. So I do think it's just something that people, to your point, right? Farmers always, I'm out. There's a little bit more.
There always is at the end. Yeah. We
Yeah,
never sell. I mean, even as a grower, when I'm helping my farmers make decisions, I'm like, what do you think you got in the bin? Oh, about 15,000. Okay, we sell 10. We don't,
yeah.
you're not going to trade all 15 because it could go very badly for you. So there always is that residual that just kind of leaks in for sure.
And places like, this Panhandle that are going to have some 100 bushel of wheat again this year and aren't going to need quite as much at the end of the railroad, right? So, this is a unique year, but the interesting thing too, I just think is like watching soybeans, because this whole bias that it's all corn,
Hmm.
corn in Argentina is going to win next year, all things being equal today. Corn in South America, even and they're going to have more to push out here starting in the next 60 days. So I do think, soybeans are the ones that ultimately could end up with a function if there's a problem in the US and if they don't get these acres switched, if they do take prevent plant. So I'd be watching soybeans for more of the surprise.
Especially
And
cash has been exceptionally strong in beans as of late.
yeah, and the trade has just gotten way too stuck on the US, cash corn is tight, therefore global corn's too tight. It's not
Hmm.
at the moment. If Europe doesn't have a summer issue, like it's just not.
Yeah.
So,
Oh yeah, I think that's the biggest thing. I think that's what most everyone missed last year was paying attention to what happened in the Black Sea and the EU. And then obviously Brazil's crop coming in 5, 6, 7 million metric ton less than initial expectations really made the world situation exceptionally tight. And it was easy to see if you were watching. But it wasn't, now it's kind of the opposite, or at the very least, the folks that maybe missed it, like broke clocks right twice a day. Like I think to a certain
mhm,
extent, some of these people they were like, yeah, it's front running. Oh, we're not going to continue to see this big business. It's a one off. It is very possible that we could be 2.6, 2.7 billion in exports this year and 2.4 or less next year. If China doesn't step in. Now,
mhm.
that's the thing, right? Like this year, had China decided to come in and buy 5, 6, 7 million metric ton, 10 million metric ton of corn in January or February, as we had thought they would need to, it would be a hell of a lot tighter than what it is. A year from now, if China does decide that they need to come in and buy 10 to 15 million metric ton, which right now they don't need to. They don't, it doesn't
No,
look like it's
and
even remotely going
and
to
they're
happen.
no, and they're sending the signal that if there's an issue this year, it's not coming until next year at the
Yeah.
earliest anyways. So these guys who are citing these tight corn balance sheets you see flying around, like it's not real.
Yeah. We gotta watch. Just watch the
Mhm.
cash movement and what is happening in there. And that doesn't mean that the prices have to go to zero. It just simply there's a reason why spreads are weak on the front end and that futures aren't really catching a huge bid, you could say. Yeah, Nick.
No, and the price is going to zero is sort of the key, right? Like you've raised the cost of production on a rented acre to 430, 440, 450. Look at the price of crude. When you had after the kind of the Saudis had ramped up production in 16, 17, crude was a structurally 35 to $45 item, for a period of time. You look at, copper, 354, now it's 480. The price of all these commodities in the world is 10 to 20% higher than pre-COVID. ag isn't.
Yeah,
So
except for
like
grain.
we yeah, like us finding support is probably more emblematic of, the production levels than it is, flat price sending some signal.
No, it's definitely going to be interesting to watch. It'll be one of those things. I truly feel like June into July in the US is going to be when you truly are able to determine if corn crop's bigger or small. Like, it's obviously
Mhm.
stocks numbers, but to me, I feel like the cash movement that you see as we work through the next 6 weeks, is going to be the bigger indicator. Like, whether or not the commercial is complacent for a good reason, or like whether they're right or wrong, and some of that and maybe complacency isn't a fair term, but I do feel like July, August, September, even no one's really looking at it right now, because anyone who's selling it is saying, I need to be covered on the inverse plus all of my carry. Like, you need to take care of the 20 cents that I'm losing, July to September, and you need to pay me 8 cents per bushel per month. Like, at this point, if you were to try to get August coverage on, you're probably going to pay a lot more, than, you are going to pay a lot more. It's not a probably than you're nearby, like that. And so for the most part, the commercial, the end user, that from what I'm seeing, is not in a hurry to cover August or September at these big numbers, because they think they get cheaper. Now, the
And
$1 million question is, do they,
no,
right,
and to
in the
confirm your
end?
point, the only place you're not seeing it is in meal, because they are covering it because it's
Yeah,
cheap and they don't
it's
have to
so
deal with that
cheap.
problem.
Yeah, and a lot of them, and Chris was on, he's on here now too. He's talked about it before, where you give certain terms where it's like, if meal gets down to here, you've got to, like, if your margins are X, you need to be doing Y. And, so I think that's a factor as well. All right, we're into the last few minutes of this. I'm just gonna kind of, Carl, I'm gonna put you on the spot, and just give you guys, like we normally do, some closing thoughts, opportunity to kind of, say what it is that you think we need to be watching here over the next week, or what is really something that's important, and then we'll call it a week.
I guess if you wanna, excuse me, what I'm looking at is month end the next couple days here. I think we have to chalk that up. And I think we get into June, we start to see, obviously the WASD and the month end stocks will see more from the fundamental side. I think next week's planning report could be one of the most watched of the year. Take the crop. I don't care about crop condition. That means nothing to me. Those numbers really don't mean anything. The progress, you got to remember, we had 12 as of Sunday, 12.4 million corn and 20 million soybean acres still to plant in the United States. Trade's been boasting that we've been ahead of our average pace on planting. We fall behind that. I think that might be the catalyst to at least get the market to start looking a little more closely at some of these stories coming up, like Ohio, Indiana, Illinois, and then up into the Dakotas especially. There's a lot of issues up in the Dakotas right now. Went from record heat to the wettest May on record. And yesterday when I was talking to some guys up there, that crop got beat by the wind. Canadian winds coming down in, especially on the wheat. So I think within the next, like I said, the next week, 2 weeks here, we do see maybe a little bit more support from the late plantings. And we do start to see, even though, like I said, I don't follow it close, we will start to see the condition reports start to kick in a little bit.
Nick, go
All right.
ahead and share. I have been graced with Colton's presence, so I'm handling him right now. So feel free to go ahead.
So Carl, I just want to compliment you on the like the government does a very good job on some things, pace, and things like conditions, usually meaningless. I always find it kind of funny. Like, we're like the one industry that takes like public government data and celebrates it every time they report it, even though it's often even misleading. So yeah, I don't see anything right now that like, again, the weather in aggregate, I think is fine. North America, if anything, I'd be watching like up into Canada, like that top of North Dakota there too. I'll wait and see what they do in the East. The cost, if it was a normal year, you were 50 cents above cost of production, I think it would be a lot easier to assume. I don't know what that calculus is. So if you don't have quite enough acres, it definitely could be a catalyst simply because, I think like things like the beans become a lot more interesting in a month if we didn't pick up any acres. Corn, again, I worry about being long into this inverse just with what's coming. And I think what you'll have interesting this year is thinking about the next is we'll get into that weather market. You'll get that look at acres early June, you'll get into the weather market. Seasonally, you're going to always peak June 28th to July 5th type, right over the holiday. But you've got a lot of trade. Your 90-day expirations with China, the EU, you're going to have a lot of trade stuff coming at you in July too. And so people kind of keep doing a lot of buying, bridging the gap to that next, when will we have definition from the administration? So, I'd keep a relatively open mind, towards the end of the month where I might be much more aggressive trying to figure out where that seasonal top is coming, whether it's in my local cash or it's, like volatility more than anything. You get what they call the variance premium, where you start to look at what they're pricing in volatility versus your actual movements you're getting. Everybody expects far more movements because of the holidays, because of the Friday weather, because of the June 30th report. So I think this could be one of those years where I might keep a slightly more open mind to what that June 25th to July 10th period looks like, especially introducing the trade.
It's definitely going to be fun. Lots to be paying attention to. We have the new. Sorry, we got Colton chiming in, but we've got a lot to be watching. We've got USDA reports. We've got cash markets. I think you're right, Nick, in that regard. Eduardo did say he just reached in and said, "Sorry, on a trip today. Completely forgot. I will be back. We're making a survey." He said the Safrina crop size. They are surveying and working on their export projection. And so next week we'll have an official number from AgriInvest on that. So otherwise, I think so much to be paying attention to at this point when we're watching cash market developments and all of the good stuff around the world, paying attention to weather and lots to trade before all is said and done. We've got a heck of a long growing season ahead of us. And so yeah, we'll see and we'll be back next week with Eduardo. So have a good one, guys.
Thank you.